In money matters, the Rand rally seems to be continuing at the start of the week. Last week saw the Rand enjoy another good trade. This week sees major inflation releases from South Africa and the United Kingdom, while all eyes will be on US Fed Chairman Jerome Powell's testimony on Wednesday as markets look for a hint on the future direction of interest rates. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now for the latest market moves. Petri, a happy Monday to you. Does that overflow onto the markets?
Good morning and happy Monday to you too. And unfortunately not, no. So the top 40 index down around 0.5% today. Quite a bit of broad-based pressure. If I just quickly have a look here. Most of the pain, it seems to be coming from, I want to say, the locals, right? So we're looking at like the banks and the industrial stuff, while once again the mining companies seem to be the ones holding the fort, or at least putting in some green. But for the most part, I mean, the US is closed today. I think it's Juneteenth or whatever the holiday is called on that side. So public holiday in the US, so we expect markets generally globally really to be a bit slower than usual. However, as you mentioned, I think the Rand quite a bit stronger on the day. Well, at least in early morning trade. It's been a relatively volatile session. In fact, I see now, so just to correct myself there, it is in fact 0.1% weaker at 18 Rand 19 to the dollar. So I'm going to go ahead and call that pretty stable, actually.
So the Rand continues to enjoy strong gains at the start of the week. What's driving the positive sentiment?
Well, I don't know, to be honest. I think we have a combination of things. I think, one, South Africa's stance on the Russian situation has changed somewhat. I think we, as a country, have made a number of very strong gestures to reinforce the idea that we are not, in fact, Russian allies, strictly speaking, by our little failed trip that we had to the Ukraine and Russia, for example. Also, a stern warning last week to Russia, saying that, listen, if Putin does come to the BRICS conference in Johannesburg, we're going to have to arrest him. So maybe, let's find a new venue. So those, I think, are two things that were major things. Also, I think that, if you haven't noticed, we've had consistently lower levels of load shedding. I think that we are actually seeing quite a bit of progress being made there, in the fact that, more electricity availability is a reality, and that maybe, I don't want to be too optimistic here. We've seen how that ends. But, maybe we might have a road to the end of load shedding over the next couple of years. These car power ships are coming in as well. We're also procuring power from outside of South Africa into our system, which is helping stabilize the electricity supply. So sentiment in general towards South Africa, I think, has improved a little bit. If you look at the Rand, it was drastic. The way that the Rand moved over the last sort of 2 or 3 weeks, all the way from, say, 20 Rand to the dollar, very close to 18 Rand 20, where it is now. That's a strong move, right? It's moved very, very strong in a couple of weeks, and I think that's on the back of a combination of the aforementioned factors.
O ye of cautious faith. Oil declined as investors waited for more detail on how China aims to support its economy over the second half of the year. Tracking other commodities lower as the week's trading kicked off. Oh, unfortunately, we've lost our connection to Petri Redelinghuys, as he is happy that we've got some electricity, but we'll touch base with him a little bit later on and get you the rest of the market update. For now, okay, let's go back to Petri Redelinghuys, trader and founder at Herenya Capital, for the latest in terms of the markets. Petri, please tell me you were not load shed, just as you were cautiously optimistic, shall we say, about the energy crisis.
I can't be too positive about the load shedding coming, slowing down and coming to an end. Bad things might happen, and what do you know? No, that wasn't load shedding, unfortunately. That was just some other technical issue.
Okay, great. So we were still talking about oil. It declined as investors waited for more detail on how China aims to support its economy over the second half of the year.
So oil is in a bit of a difficult situation, right? We've seen that oil producers are cutting back production, trying to stimulate the oil price a bit higher. I think we've spoken a little bit about the support level sitting around $70.50 a barrel. That's quite a significant support level. It stretches back all the way to December 2021, even sort of August, July April 2021, so it's not that far back, but it's about 2 years ago, that this $70 level has been quite a significant support level for oil. And it seems as though every time oil approaches that $70 level, we see the Saudis or, OPEC in general make some sort of a move to cut production or to make noise around, supply shortages in order to get the oil price to stay above that level. So there's this tug of war that's busy happening. On the one side, you have the Chinese economy that's actually faring relatively well, that is, quote unquote, coming back and going to pick up production and increase demand for energy, combined with the, OPEC sort of cartel slowly starting to reduce oil production. So that's one side pulling against the other side, which is this narrative around a global recession in the second half. So I am on the camp that, we might see both scenarios play out. I mean, in the West might go into a bit of a recessionary type period, which I think is starting to become evident with what's happening in the U.S. We actually saw interest rates be put on hold last week in the U.S. In other words, interest rates were not increased by the U.S. Fed because even though they've got high inflation, they're starting to feel the pinch economically of the high interest rates, right? So I think we're having a situation where on the West part of the equation, the world is really starting to slow down, and the high interest rates and the high inflation is really starting to kick, and this is leading to a recession, which, as we know, will spill into the rest of the Western world, if you want. So that's Europe, North America, Australia, New Zealand, Canada, those types of places. I think will be somewhat affected by that, and I think that it's almost inescapable at this point to see this global recession in the second half. And then the other side of the equation is the East, right, where China is sort of stimulating the economy. We saw them reduce, reserve bank deposit requirements for the major banks. So that's like a quote unquote stimulus that they're trying to get the economy to grow a bit faster there. And I think, which is the complete opposite to what the U.S. is doing, right? They're putting up interest rates as where the Chinese are making it easier for people to lend money. So I think that we probably have the situation where there's this tug of war happening between the East and the West for a little while. And I mean, I suppose that is to a large extent playing out in Ukraine. But I do think that from the East perspective, I think we probably see a little bit of growth. So until then, my personal view, or the view of the business as well, has been very much that if oil drops below $70.50, then, run for the hills and get rid of your oil stocks and your oil investments. If it stays in this range between 70 and sort of $88, then, we're going nowhere slowly. That's kind of the trading range which is in, and above $88, and we probably have a global growth scenario again, and we can, get aggressively long energy stocks on the back of that. And now, I mean, we're floating at 76.33 at the moment, so that's smack, I don't want to say in the middle of the range, a little bit below the middle of the range, essentially going nowhere slowly, right? So for now, I think we have to continue to sit and watch this tug of war between East and West play out, which is going to be more important, Chinese economic growth or US/global recession. That we will find out, I suppose. The oil price will tell us within the next 3 or 6 months.
Okay. Salesforce expects to generate more than 90 billion rand in new business revenue through its local network in the next 3 years, and is also looking to create some 32,000 jobs locally in the same period. A realistic target?
Sure. 90 billion is a lot of money, hey? Look, I really hope so. Their product is expensive, I won't lie. But in terms of the product offering that they have, which is CRM software for the most part, client relationship management software, for those who are not sure what the acronym means, it really is incredibly good. It really is a very, very good product. There are some local producers or software developers that have, CRM systems that are adequate. But to be fair, I don't think anything can really touch the capabilities that Salesforce has. So if they lower their price, perhaps to allow smaller businesses into the ring, then maybe they stand a chance. I don't know. 90 billion is big. 32,000 jobs is a lot. For a software sales business, I don't see why they would need so much staff to start off with. So I'm not really sure that I understand exactly what their plan is. But I think that it is interesting to see. I mean, we know that Salesforce has been struggling a little bit in the sort of Western world or more developed world. So they are, they're needing to grow their client base to protect revenues. So it's interesting that they're targeting South Africa and other emerging markets. And it's encouraging, and I hope, really I do, that they can create 32,000 jobs and penetrate the South African market in a meaningful way. So that, it's a great product. As I say, it breeds a bit of competition, so hopefully it fosters a bit of competition from the local scene as well. And if we can create jobs, that is a welcome change. I don't know how they plan on doing it, so I guess we watch with bated breath.
Thank you very much, Petri Redelinghuys, trader and founder at Herenya Capitals.